Good evening, it's Mr. Intermarket Analysis bringing you the review of the FTSE 100 for Friday's trading, the 22nd of November. One day left till my birthday, which is the 23rd, so I should be 31, getting old, grey and grizzly. Okay, so definitely grizzly this week and definitely grey this week given the volatility in the markets. Basically, the way in which I can sum up this week's trading so far, the last few trades I've got a last FTSE trade that has a stop loss at around 6713, almost on the verge of being stopped out on that, unfortunately. And this week, yeah, been volatile week so far. This week, the last two trades, well, I was up almost at 250 points, but my Nasdaq got stopped out, minus 20, and my CAC got stopped out as well, minus 30. So I'm still on 200 points for the week, but it's a tricky market, folks, very tricky market. And I currently have a short bias in the FTSE, as we can see on the daily chart. So yes, the summation of this week so far, really, from my perspective, is taper on, taper off, the arguments for and the arguments against. And then you've had the arguments for a negative deposit rate, and then obviously that dashed, all those hopes dashed today, and the euro short squeezing back higher. So taper on, taper off, negative deposit rates on, negative deposit rates off. That's basically the best way of understanding it. It's a shame, really, because it's very hard to read the fundamental currents in the market at present, and that's why you're seeing this volatility, etc., etc. I mean, one reason was look at oil, for example, the oil trade. I mean, Chinese data overnight was relatively weak. China was flat overnight. Although the Nikkei obviously went on a bazooka mission, given the fact that yen has been absolutely cabbaged or clobbered or hammered, and really the effect on the Japanese yen obviously going down caused the Nikkei to go higher, which in turn obviously caused the US markets to obviously short squeeze higher, given the carry trade, because USD JPY and Euro JPY basically skyrocketed higher. Okay. And obviously that did affect the FTSE to a certain extent, but yet still failed to cause the FTSE to break the bearish pattern here, as we can see right now. We've got a falling, expanding wedge pattern. Okay, so you do have a case for inverted head and shoulders, which I've explained already on the daily chart. But an inverted head and shoulders at the top of a market isn't exactly potent, so remember that, folks. So you've got a potential here for inverted head and shoulders for it to break and or test the highs again. That really needs to happen based on commodities, although commodities have started to move higher, so the argument is certainly there for the upside. But again, given the fact that we failed to do it on yen carnage, is a cause for concern from my perspective. That's one of the reasons why I've been well, I was a bull in the morning, so obviously the morning trade played out well, although the market did go against me initially, and eventually we rallied higher, although given the fact that the DAX had been hammered and post negative deposit rate being rejected, that was a factor to keep European markets at bay. Okay, you had the negative deposit rate being rejected by Draghi the day before versus Japanese yen, which we term as Godzilla, so the Godzilla experiment. Overnight, obviously that caused the yen to get absolutely annihilated, which in turn caused the Nikkei to rally because there's an inverse relationship there due to the carry trade. Okay, and obviously that then is funneled through USD JPY and Euro JPY via the US market. So you can just do an analysis, just map the chart of the USD JPY versus the S&P 500, map a chart of the Euro JPY versus the S&P 500, and you'll see there's almost 100% positive correlation. Okay, EJ goes higher, so does S&P. UJ goes higher, so does S&P. Why? Because of the carry trade. Okay, obviously they finance cheap money from the yen and pump it into the US markets. Okay, that's basically how it works, and obviously that's what QE does. It inflates asset prices to ridiculous levels. That's why Mr. Icahn this week obviously stated that the market was in a bubble. Okay, and the bubble continues. Okay, until somebody pops it. And we'll see exactly when that happens. So obviously you had talk of tapering as well, given the fundamental currents, was discussing that, and that obviously has caused commodities to get hammered. That's why your CRB index is still, I've posted a chart on my website, the CRB index still under pressure, coal under pressure. Obviously the oil price did short squeeze higher, which was quite surprising given the fact that Chinese data was weak overnight, but that was mainly due to the inventory data, I'd say, from the day before. Okay, So let's have a look at this, folks. So down, falling, expanding wedge pattern. We are being obedient within that channel. We put in a doji today, although we did go as low as 6644 at one point. I had my stop loss just below at 6620 region, I think it was, on the long side. I got out, but slightly too early, around plus 20 points. But given the fact that we rejected negative deposit rates, given the fact that DAX was getting hammered, etc., etc., and failed to rally the day before, given the negative deposit rate talk. Okay, so I had a bearish bias. Okay, given the fact that Chinese data was weak overnight and China was flat, and the American markets had sold off the night before due to talk of tapering. Okay, so on this occasion here, FTSE is certainly under resistance. Okay, so this level is just watch out for the upper channel here, 6-700. Anywhere around the 6-700 level will act as resistance. Very hard for it to certainly move higher. I don't expect that. If it does, if it breaks the 6-730 level convincingly, then yes, we do short squeeze back higher to 6-840 again. Okay, that's your daily chart. Okay, so let's have a look at the smaller time frames now. Okay, so smaller time frames. Okay, so where are we? Yes, so this is the inverted head and shoulders pattern I discussed. We did go as low as a 75% fib retrace at 6641 before we rallied higher, but this rally right shoulder it's not convincing. You never want to, well, you can see it, but you don't ideally want to see a right shoulder go as low as 75%. It's not very convincing. Okay, so what do we have here? Okay, so certainly an inverted head and shoulders within an inverted head and shoulders. So you got your left shoulder there, now you've got your head over here, which we've put in at 75%. We've retested, and obviously we can go back and retest the key trend line at 6720. So that's certainly a possibility. Okay, but if we do go higher here, 6713 will be at a resistance level, 6720 will be a resistance level, and given the fact that if Asian markets are down overnight, then this will certainly move lower, and I'll be looking to short this market again. Okay, so certainly keep an eye out for that. It's not exactly a bullish pattern, but given the fact that the US markets have rallied overnight, we may see a gap up higher and a gap and go, and obviously the inverted head and shoulders to trigger and play out as well. Okay, so one of the reasons why I was quite bearish on the FTSE itself, okay, was primarily due to the fact that it's got a H&S formation at 10 minutes. So you can see how it's got IHS on the 60 minutes, but yet it's got a H&S on the 10 minutes. So this is the pattern that we're looking at and observing at the moment. Okay, so right shoulder here, boom. Okay, so you had quite a bearish engulfing candle close at 1630. So obviously the bias is certainly bearish going into the close. Now my only concern is that you haven't filled this gap here at 6630. Okay, until that gap is filled at 6630, I can't really be on the bullish side. Although you can, as a technician, you can certainly close the gap at 6724, which is certainly a possibility tomorrow, given the fact that the US market is higher. And if China continues to hold its gains, then that's definitely a possibility. Okay, and obviously you've got this expanding wedge pattern here as well, so keep an eye on that. Okay, let me just get that, extend that across. This is just mentoring. I was putting in a potential pattern here, which hasn't played out yet. Okay, so these are all just support resistance levels, and I have key horizontal resistance, and I've got my gap level resistance in there. So as you can see, we gap lower, obviously the market sold off, held a 75% retracement, and obviously moved right back higher. When we got to gap fill region, that's when I started to look to exit this market, and I expected a reversal, or should I say even slightly before, where previous support equals resistance. But that failed to transpire, folks. It failed to transpire, and we continued to move higher. And obviously, like I said, we have got a H&S formation. So I certainly be looking to, given the fact that Asian markets are relatively flat or lower overnight, given the fact that the yen pairs aren't getting hammered again, or should I say rallying again, should I say, then certainly looked for a downward bias and probably play the 6640 level again. Okay. So there's a lot of factors at play here. Okay, so I'll call it a day there, folks, on the 10 minute and 60 minute. I've given you an intro and analysis. Just remember, key takeaway: 6725 resistance, 6630 support. Until then, with sideways chop fest. Okay, risk on, risk off, wax on, wax off. Goodbye now.